Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 23rd of November. UK's autumn statement, Hammond's first. UK Chancellor Philip Hammond will present the first detailed economic policy announcement of the new government. Usually this is not a major market mover, but as the country gets ready for Brexit, it could attract some special attention. When he became Chancellor, Hammond said that the UK may need a fiscal reset, hinting the prospect of a shift towards more fiscal spending or large tax cuts. However, the economy performed better than many expected following the referendum vote, which may delay any significant measures for later, tougher times. Hammond also stressed that any fiscal boost in the autumn statement will be careful, considered and targeted, and designed to help the UK economy to cope with the turbulence of leaving the EU. He may decide to boost growth and raise living standards by spending more on housing and targeted infrastructure projects. However, he is unlikely to cut taxes substantially, if at all. Targeted fiscal stimulus by the government may lessen even further the need for additional monetary easing, something that could prove positive for the pound. We expect Hammond to strike a balanced and cautious tone, offering little today, but promising readiness and more measures if the UK economic conditions deteriorate. The pound's reaction is likely to depend on his promises and the size of any potential measures. In the US, we get the FOMC minutes from the November policy meeting, where the committee signaled that the case for a rate hike has continued to strengthen. The officials decided to hold off from raising the federal funds rate, essentially signaling that they are very likely to take that action in December should the data hold up. Ever since that meeting, economic indicators have painted an upbeat picture of the economy, with another solid jobs report and strong retail sales in October. In line with the optimistic data and the FOMC's signals, the market is now pricing around 95% probability for a December hike according to the Fed funds futures. Given that these minutes will only reflect the pre-election era, we believe that they are likely to be viewed as outdated. A lot has changed following the election outcome. Investors have priced in much higher future inflation than previously due to expectation of fiscal stimulus, evident by the surge in the 5-year inflation expectations as well as treasury yields. Thus, we believe that the market participants will wait for the December policy statement and the updated dot plot in order to have an update forward guidance that reflects this change in financial conditions. As for today's indicators, from Eurozone we get preliminary manufacturing and services PMI data for November from several European countries and the Eurozone as a whole. All indices are expected to remain well above the 50 critical barrier, which in our view is a sign that ECB's previous easing measures are making their way into the real economy. Given the relatively optimistic data from Eurozone lately, we maintain our view that the ECB is likely to extend the minimum duration of its QE program in December, but is unlikely to introduce any new measures beyond that. As for the US indicators, the main one is durable goods orders for October. The forecast is for the headline rate to have rebounded following a minor decline in September and the core rate to have risen somewhat further. Following the encouraging string of US data lately, and in particular the robust retail sales for October, we believe that rising durable goods are likely to be another indicator making the FOMC's decision easier on whether to hike in December. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.